In this video, we'll be taking a look at the future analysis to get prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. So we're taking a look at gold, crude oil, EUR-USD, USD-JPY, and the DXY. Starting with the gold chart on the 2 hours time frame, as we all know, gold has been in a solid bullish trend, and the chart we have on screen right now is pretty straightforward. So bullish case scenario would mean price consolidating more within this symmetrical triangle, followed by a bullish breakout to the upside. So this is going to be my bullish case scenario to go long in continuation of the bullish trend. So assuming price is going to keep up with the bullish momentum we've seen over the past few weeks or months on gold. So for a bearish case scenario, getting rid of this, that will mean waiting for price to give us a bearish breakout below this area of value, right? So the symmetrical triangle, so down, consolidate over here, then down. So assuming this is going to lead to the end of our current bullish trend, or at least a series of dumps before we eventually reverse back to the upside. But I don't think I'm optimistic that gold is going to keep going up at least for a while till we get that blow off top or the peak where price has to reset. But at the moment, we've had a double top, which really signifies an end, a potential end of the trend. Strong reversal. That's what led to this massive dump last week, right? So right now, we're going to be watching closely what happens within this area of value. So we have a closed range symmetrical triangle price creating lower highs, higher lows. So we're likely going to see some dials down volatility on gold, at least within this range, until the market decides where it's going to head, if it's going to go higher or if it's going to go lower. So whichever happens, we are going to make sure we are alert, so that when price makes it move, when the market makes it move, we'll be able to take advantage of the price action that evolves from that action. So something else to pay attention to is if you pull up the moving average on the 4 hours time frame, this moving average on 4 hours time frame coincides or is getting closer to this area of value over here. So we have a very good area of support here. So if we do get a breakout to the downside, for example, let's say we get a move to the downside, so you should be careful when we get into this area of value, or if we do get into this area of support, because that could mean a potential bounce for a continuation of the trend. Because at that point, the moving averages, 200 EMA and SMA on the 4 hours time frame might have crept up all the way to these price levels, which could act as a very good area of support. Also in line with this area of support over here on chart, leading to a higher price movement. So be careful when you go short, because we have a very strong moving average on the 4 hours time frame over here, 200 EMA and SMA. I think that's our good support in terms of moving averages, and another price action here in terms of the immediate higher lows before this massive move to the upside. So this is going to be interesting. So if we get a bearish breakout, pay attention to these levels. So if you're going short, take profits should be around these levels, because there's a good chance we see a good bounce in continuation of the trend, just in case you're hoping you're going to hold the trade longer for more extended gains. So that may not happen, because we have a series of confluences over here that could eventually lead to higher price movements on gold. So that's if we do break this symmetrical triangle to the downside. I hope we do, because getting good long position over here would be a very, very good opportunity for us to make some really killer returns on this gold chart. That's briefly for the good setup, good analysis, and what I'm watching out for this week. If you have questions, please leave them in the comment section down below. If you disagree with me, also let me know why you disagree with me in the comment section down below. Moving on, we're talking about crude oil. So crude oil, briefly, last week we anticipated a solid bullish breakout to the upside, and we did get a breakout over here, and this led to an estimated price movement of about 400 pips. I think I was able to catch 300 pips from this move. I think I exited my trade around these price levels. So if you caught these, kudos to you, and I'm sure you must be enjoying this profit right now. So at the moment, we seem to have gotten stopped from this, stopped by this area of resistance. So there's a good chance we dump, right? So there's a good chance we do something like this, then followed by a dump to the downside in continuation of the bearish trend. So this is my bearish case scenario. So I'm going to show you how I'm going to trade this, right? I'm going to go short if we are going to continue going down, right? Because as you know, there has been a bearish trend for some time. So lower highs, lower lows, as the case may be. But at the moment, we just bounced off of this area of value. So I'm just going to adjust it right now because this is a pretty wide range, right? So we have this range here. So this range is our area of value, area of support. So we talked about how price could dink into this area of value, then bounce up, which is exactly what happened. So right now, one question pops up, right? Is this area of resistance going to hold, or is it going to, crumble, right? So for a bullish case scenario, let's talk about the bullish case scenario first. And this is tricky because I may not go long even if we get a break from this area of resistance, and I'm going to explain why. So for a bullish case scenario, you want to see price create some sort of more consolidation around its price levels, right? Followed by a good breakout to the upside. So if this happens, then you could go aggressively. You could go long here, right? At a breakout from the resistance level, stop loss could be tight underneath the lows that lead to the breakout. Then take profit target will be around this area of resistance. So this will be a risk to reward ratio of approximately, let's see, 120 pips SL to 300 pips SL. So a risk to reward ratio of 1 to 3 or 1 to 2.5, which is decent in my opinion for crude oil. So it's all about probabilities, right? So if you're having a tight enough stop loss, then you shouldn't be afraid or scared to take that trade opportunity. Now for a bearish case scenario, it's going to be the opposite, right? So you want to wait to see how price consolidates more around its price levels, then followed by a breakout to the downside. So I'm going to show you the downsides to this setup right now, why it's tricky to trade. So if this happens, then you have something like this, a good consolidation followed by decent lows, followed by a good breakout. So if we get a bearish breakout, your entry could be around the breakout, stop loss can be as high as these price levels, take profits can be as low as this low. So this will give you a better risk to reward ratio of approximately, so stop loss will be approximately 120 pips, take profit approximately 500 pips or 600 pips. So that's approximately a risk to reward ratio of 1 to 5, decent in my opinion. That's what I'll be watching out for to go short on crude oil. Now the downside to this setup would be this, right? If you take a look at, just give me a minute. So if you take a look at what happened over here, right, you can see how price went up, gave us a lower low, went up again, lower low, then swept this resistance level, then dumped, right? So if you were hoping to go long here, I guess you probably would have been wrong if you went long here, though this didn't properly clear out these highs, right? But you can see same thing could happen again. So the market could trick us, give us a fake out, and make us feel like it's gonna go higher. So by doing something like this, so we may get something like this, a pop up like this down. So when you go short, it goes down, you feel okay, we're going down, and then it goes up again then before it goes down. So something like this could happen. So that's why if you're going to go long, make sure you're accepting the risk of a fake out, because something like this could happen. It happens a lot on crude oil, right? Just when you feel like you are entering at the right time, you get something like this and you just see price reverses back, gives you that short position, then it follows the actual trend. So I'm going to be very patient for this. I'm not going to go long, I want to go short, right? So for me to go short, I'm going to wait for the best opportunity, the best risk to reward ratio for me to go short on crude oil, because I do think crude oil is still bearish. I don't see any reason why it has to start popping off right now, at least not until we clear out these lows properly, right? Then we'll see what happens. But if we do take out this area of resistance, we'll take out this one, then I could start thinking about going long on crude oil. But for now, we're still in a very safe zone to keep looking for short trade opportunities and just pay attention to something like this, because this could absolutely happen and wipe you out if you intend to go long. So that's just something to be careful of. And it's all about risk management. If your risk management allows you to take trade opportunities when we clear out this area of resistance to tight stop loss, then by all means you can do that. But for me, I'm staying away from longs right now on crude oil, because I only went long because this was a decent opportunity to go long, right? Going from the lows to the highs. But right now we're midway through these lows and this area of resistance. So I'm going long here, only to go short if the opportunity presents itself. So something else that could happen, we could see price tank straight down, right, without even giving us an opportunity to go short. That's fine. I'm not going to rush into any positions on crude oil, because like I said before, crude oil can be tricky. Just when you feel like, oh, you're going to miss the opportunity, you go short, then it pops up. So wait for your confirmation before you go short. That's it briefly for crude oil. If you disagree with me, please leave your thoughts in the comment section down below. Moving on, we're talking about EUR-USD. So EUR-USD, another tricky chart, but I don't trade currency pairs that much, so I'm not going to be trading this. I'm just doing this for those who trade currency pairs, right? So the thing here is we have a strong bullish trend, so higher lows, higher highs, obviously. And now we have a bullish flag, which is also a descending channel, which also coincides with a retest of this trend line. So there's a good chance we keep going lower, aiming for this area of support. And there's a good chance we, get a consolidation over here, followed by a good breakout. So now, which do you follow? Right? So this is a question that popped up in our Discord this past week. So how do you trade something like this? Now, what I do in situations like this is I follow the chart wherever it leads and pay attention to my risk management. If the trade is worth it, the risk to reward ratio is there, decent, then by all means you can, shoot your shot, right? You could take those opportunities, because trading is all about probabilities. You can't be sure 100% all the time, right? So if the probability stacks up in your favor to show that, there's a good opportunity for a decent trade returns, then by all means you can do that following a strict risk management principle, right? But if you feel like, this is too confusing, I'm not going to bother with this, then just let it play out. Let it play out, let the market show its hands, then you can take advantage. So by letting it play out, what I mean is you could wait, you could possibly see price come here, consolidate. So instead of rushing to go short, you could see a bullish breakout. So a bullish breakout followed by a retest, for example, more consolidation, another bullish breakout to the upside. This gives you a confirmation that the market is going higher. You get something like this. So that's what I mean by letting the market play out if the chart looks too confusing. So you do not have to trade everything. Like for a chart like this, I stay clear, I stay away, because it looks crazy, right? It looks bearish, it looks bullish at the same time. So what are you going to do? Even if you're waiting for confirmations, your confirmations could be wrong, right? Could give you something totally different from what you're expecting, right? Especially if you take a look at the DXY, which we're going to take a look in a few minutes, you'll notice that DXY is probably going to get weaker or stronger. It's indecisive, right? So what you do is stay away, look for clear charts, clear chart opportunities like gold, for example. It's clear, crude oil, it's clear. Just focus on those and let the market play out. For the confusing chart, you do not have to trade a chart that looks confusing. You don't have to force in any trade, right? But for EUR-USD, for example, for a bullish case scenario, what I'm going to watch out for would be something like this, right? So this is a 2-hour chart, mind you. So for a bullish case scenario, I'm going to wait to see how price reacts with this area of resistance, so the higher bounds of the channel. If we get a good consolidation over here, right, followed by a bullish breakout, clearly taking out this trend line, then I am going to attempt going long. Mind you, I'm just saying this for those who's going to trade this, right? I won't be trading EUR-USD, just doing this for the folks out there who do, right? So entry is going to be at a breakout from this channel. Stop loss is going to be underneath consolidation, lead to the breakout. Take profit target, first one can be as high as here, possibly going to lead to another retest of this other trend line here. Then if we go higher, second take profit target could be as high as here or over here, right? So this is how I'm going to trade EUR-USD going long. So for a short trade position, which is scary right now at the moment, you could do something like this. So if you want to go short, you're desperate to go short, you don't want to miss the opportunity, you could pick out a trend line like this, right? Take these lows, because right now there's immediate consolidation, and watch to see how price reacts with that trend line. So if this happens, then you want to watch out for something like this. We go up, go down, consolidate, then give you that bearish breakout. If this happens, then you could attempt going long, aiming for the lower bounds of the channel, right, where we are likely going to see some consolidation, then move to the upside if it happens. So that means your entry is going to be underneath this place. Stop loss is going to be above these highs, possibly above the resistance level of the channel. Take profit target is going to be around these lows. This is how I'm going to go short on EUR-USD. So with this setup, you'll be able to play both sides, right? Go long if it's bullish, because a breakout from this channel invalidates this current channel setup, and if it goes short, it in line with the bearish momentum on the channel, which also in lines with the breakout from this trend line and retest. So that's how you hedge your trade, trying to take advantage of both case scenario, right? So there's a good chance we go short, there's a good chance we go up, but I just outlined the two best ways to take advantage of the price action, whichever happens first, right? Whichever comes first. But remember, trade with good risk management, because that's what's going to save you if you turn out to be wrong, right? So something else to pay attention to is, if you're going short, also pay attention to these lows, right? Because over here we had a double bottom, right? So a double bottom means strong potential for a reversal, which means if we eventually get that breakout, for example, from this trend line, there's a good chance price may just bounce up of these lows, right, and go higher. So just when you are waiting for price to come to the lower bounds of the descending channel, we may get a bounce from these lows because we have a strong double bottom here. Something else to pay attention to. And if you factor in that, then you'll be risking what? You'll be risking a 50 pips move for a potential 50 pips or 60 pips SL, which makes it not a decent opportunity in my opinion. But we understand the fact that there's a good chance price comes all the way down to these lows. But there are no guarantees because we have a strong area of support here. And the trend is still bullish. The bullish trend is still very much intact, right? Even though we had a breakout here, a retest, seems like we're going lower, it's still a bullish trend because higher lows, higher highs, right? Just we haven't made a new high yet. So that's it. That's my outlook for EUR-USD. If you have questions, please use the comment section down below or pop into our Discord and I'll be sure to answer all your questions, right? Moving on, we're talking about USD-JPY. So USD-JPY, briefly, this has been a solid bullish trend. This is a daily chart on the USD-JPY. I told a member of my Discord community I'm just going to review USD-JPY to see what's happening down here. Now, if you take a look at this chart, it looks absolutely bullish on the daily, right? And there's a good chance we keep going higher. So there's a good chance we do something like this, come here, maybe dump a little for bigger consolidation. USD-JPY can be crazy like that, then followed by a big move to the upside. But overall, long term, this looks like a solid bullish trade opportunity. And I think this is going to stay bullish regardless of what the DXY does. So regardless of whether the DXY is bullish or bearish, I think Japanese yen is going to be the major driver on, USD-JPY, right? So something to pay attention to. So going on to the lower time frame, let's say 4 hours time frame, for example, because this is a very big chart. So I wanted to fit my screen so I can explain, so I can explain what I see clearly. So now for USD-JPY, now this is what we see. To go long, probably want to wait for a move into this trend line, see how price reacts. So don't just jump in, right? Wait for a good consolidation because we are likely going to get a good consolidation like this, then followed by a breakout. So if indeed the market is going to go higher, I don't think we're just going to cut straight through and keep going higher. It's possible, but to be on the safer side, it will be best to wait for some sort of consolidation like this. Then after the bullish breakout, you could go long after the breakout. Stop loss can be placed underneath the consolidation list of the breakout. First take profit target can be as high as this price levels, and second one could be as high as this one. So this is how I'm going to go long on USD-JPY. The only way you go short on this chart is if you have a clear reason to go short, because right now both on the daily, on the 4 hours chart, it looks bullish, right? I know there's a good chance we also come fill up this gap here. So to go short, I'll be watching out for maybe a pop into this area of value, a reversal, something like this, then a breakout. So if this happens, because this gives you a tighter risk to reward ratio, right? So this is what I mean. So something like this could happen. It could be like this. It could be like this, right? But just some indication of a consolidation around this area of resistance followed by a bearish breakout. You do not want to go short in no man's land. No man's land will be going short around these price levels, right? You don't want to go short here because USD-JPY is extremely volatile, and the way to go short will be aiming for a good opportunity to go short around the higher bounds of this consolidation, this huge consolidation. Because if you're able to go short here, your stop loss can be placed above this trend line, right? Which means if price goes above here, your setup is invalidated. So you don't want to be You don't want to go into a short position in no man's land where price could easily just wick up and wick down and you are wiped out of your positions, right? So something like this will be opportunity to go short with a take profit target around this trend line, hoping that price consolidates more and breaks through, aiming for a retest of this area of support. So this is something that could also happen. But to go short, I would recommend getting the best trade opportunity possible, right? Mind you, you could even, right, in this case, you could even go short when we tap into this. See, you could go short if price taps into this trend line, right? You could go short at the sign of a reversal pattern, maybe a doji or a bearish engulfing or something that indicates a potential reversal on the higher time frame, let's say 4 hours, right? And if we get a reversal, you could go short as early as these price levels, right? Because this will give you a very tight stop loss. So your stop loss can just be placed above the candle that tested, this trend line, right? This gives you an extremely tight stop loss because it's risky to trade USD-JPY because of the volatility. So getting an entry as early as possible gives you a better opportunity for a huge downside without having to take on too much risk, right? So with this very small risk, if you are right, then you can see the potential take profit target will be as much as 500 pips with a stop loss of just maybe 70 to 100 pips, right? So now I'm going to trade USD-JPY. If you have questions, leave them in the comment section down below. Lastly, we're going to be talking about the DXY. So DXY, I won't be spending much time on this chart. This looks, well, we're still in the bearish trend though, right? So this is a 2 hours chart. Let me go to the 4 hours chart. So this is clearly visible. So 4 hours chart, still in a solid downtrend, right? But right now we seem to be consolidating within this range. It seems like a descending triangle in my opinion. So we have a base, area of support, lower highs. We had a breakout from this trend line. Now we seem to be coiling downward to the downside, right? So anything that pushes, if DXY tends to go lower, this is going to cause some weakness in the DXY. Gold is probably going to explode. EUR-USD, GBUSD are probably going to go higher, you get. So that's the reason why EUR-USD is tricky. But USD-JPY, yes, that could be one of the reasons why USD-JPY pops up, into this area of resistance, then dumps again before it goes higher, right? That could be one of the reasons. But if not, the JPY could be so weaker than the DXY, that could possibly lead to USD-JPY going higher, right? So that's it briefly for this week's analysis. If you are trading, major currency pairs, watch out for the DXY, because right now we're at an inflection point where we're either going to get a consolidation like this, followed by a breakout to the upside, or we are going to get a move to the downside, consolidation, and a breakout to the downside. In which case, I believe you already know how this affects major currency pairs and gold. So with that being said, that's it for this week's analysis. If you have questions, leave those questions in the comment section down below. You could also join our free Discord, get a chat with me, share your chats. I share a few chats too as well. So that's it for me, guys. See you next week.